refer to it in the future if you want to. Okay, and then um for a while.
Hi, Miss. I think you're mute, Miss.
Oh, okay. Thank you for calling. Ito. Ganina ra ko si Big Yaw Yaw. Anyway, so balik. So the required rate of return is the threshold that we are going to use as investors in order to decide whether to undertake a particular investment or not. So, for example, if the required rate of return, kita nga investor, let's say 10% ang ato ang required rate of return. If we are presented with an investment opportunity and that investment only can offer us 9% na return, then we will not accept that. So in order for us to accept a particular investment opportunity, it must be at least equal to our required rate of return or more than that. So the required rate of return is the nominal rate of return that an investor needs in order to make an investment worthwhile. So this required rate of return varies over time. So it's not fixed. Once na kay required rate of return, you may also change it as time goes because of the changes po sa following factors. We have the real risk-free rate, then inflation premium, and risk premium. Sometimes the real risk-free rate is given, but sometimes dili pod. So if the real risk-free rate is not given, then we have to compute for it. The formula is this. So real risk-free rate is equal to 1 plus nominal risk-free rate over 1 plus inflation rate minus 1. So this minus 1 shall be deducted after this one. Dili na siya appeal sa numerator, okay? Lahi na siya si minus 1. So first, kay divide sa nimo kani 1 plus nominal risk-free rate, then over 1 plus inflation rate. After you get the answer for that, then minus 1. That's how you compute for real risk-free rate. So let's have this example. Determine the real risk-free rate if the nominal risk-free rate is 8% and the inflation rate is 3%. Now let's go back to our formula. Okay, again, to compute for real risk-free rate, that is 1 plus nominal risk-free rate over 1 plus inflation rate minus 1. So, given these numbers, okay, let's use our calculators. So let's compute for the real risk-free rate for this one. And by the way, make sure to input the percentages in decimal. Okay, when you add katong 1 plus nominal risk-free rate, then over 1 plus inflation rate. So the rates there must be expressed in its decimal form para masakto atong answer. So pila man? Christine Jane. Pila man imong na-compute inday, Christine? O manitingog si Christine. How about, na may chat, sige. 0.0485. Okay, so do you have the same answers? Okay, that's correct. So 4.85%, or if you round it up to one decimal place in percentage, so that's 4.9%. So the real risk-free rate in this case is 4.85%. So after you deduct 1, diba makuha tag 0.0485, then convert it into percentage. Kaya ang gipangita man kay rate or percentage. So the real risk-free rate in this case is 4.85%. Okay, this one. So again, ayaw sa i-minus si 1 diri sa numerator. Ay pa nimo siya i-minus after nimo makuha ang answer ani. Now, how about if the nominal risk-free rate of return is missing? And what is given is the real risk-free rate of return. So, to compute for nominal risk-free rate, that's 1 plus, okay, palihog kog mute sa ha. Again, careful ta diri sa Zoom kay inigsud na to. Unmute ta diretsyo. Okay. Unmute diretsyo inigsud ninyo sa Zoom unlike sa Google Meet ba. Okay, basin makadungog kog mga incriminating evidence din na ninyo. Okay. So at least kung namoy gibuhat nga incriminating, wala tay evidence. Anyhow, so let's proceed. Nominal risk-free rate is equal to 1 plus risk-free rate, or this is the real risk-free rate, kani 1 plus risk-free rate, times 1 plus rate of inflation, then minus 1. Again, nominal risk-free rate is equal to 1 plus risk-free rate, kaning risk-free rate, this is real risk-free rate, times 1 plus rate of inflation, then minus 1. Let's have this example. Determine the nominal risk-free rate of return if the risk-free rate is 3% and the rate of inflation is 3% as well. So let's go back to our formula. That's 1 plus risk-free rate times 1 plus rate of inflation minus 1. Okay, so ilan man inyong na-compute? Sige, type lang nyo din sa chat box. 6.09 or 6.1. Everyone got the same answer? 6.09. Okay, that's correct. So using our formula given, so that's 1 plus risk-free rate here is 3%, so that's 0.03 in decimal form, times 1 plus the inflation rate, still at 3%, so 0.03, and then deduct 1, you will get 6.09%. Very good. Now, in an investment setting, an investor sets his required rate of return as the base return he requires from an investment. However, given the usual uncertainty in the market, it is difficult to meet that required rate of return exactly. So, in other words daw, initially, no, at the start, mag-set ta og ato ang kaugalingon nga required rate of return. However, since there is too much uncertainty in the market, ato siyang dagdagan gamay, no? Tagaan nato siyang allowance ba? Because it is difficult to meet that required of return exactly. So na dapat tay allowance for that. So as such, an investor would set his return above his required rate of return to diminish the risk that his required rate of return will not be met. So unsa may tawag na to aning giad na to. The excess return above the investor's required rate of return is known as the risk premium. So our initial assessment of the required rate of return, puna na to siya to compensate for the uncertainty sa market, and we call it the risk premium. So what is then the exact or the complete formula under CAPM or capital asset pricing method? This is our complete formula. So required rate of return can be estimated by adding the risk-free rate as determined by government securities. Guys, paki-mute ha, paki-mute. Inigsod ninyo, i-mute click medyo ma-distract ko sa background noise. Ani. Please mute. Okay. I-chat ninyo. Hala, naku nadunggan nga incriminating evidence. Sige. Okay, so going back. Required rate of return can be estimated by adding the risk-free rate. Kung kag risk-free rate, mao na siya ang rate nga wala gyud risk. So ang kaning rate nga wala gyud risk, this is actually determined by government securities. So kaning mga bonds nga i-issue sa ato ang government, we consider them as risk-free. Kaya nganong risk-free man kung si government ang mo issue sa securities? It's because ang government is assumed to be always liquid. When you say liquid, naagid sila kwarta permi nga ikabayad. So wala tay risk of default. Dili ta makuyawan nga di ta bayaran sa government kung mopalit ta sa ilang bonds. So that's why government securities are treated as risk-free investments. So wala gyud risk involved whatsoever. So again, for the required rate of return, we add the risk-free rate. Dinhi sa ato ang formula, ang risk-free rate mo ning RF, R sub F. Mo na ang risk-free rate. Okay, so we add the risk-free rate to the product of, i-add daw nato siya to the product of. Kung may kag product, unsa man na siya nga mathematical computation, di ba? Multiplication. So i-add daw nato siya to the product of what? Of the beta coefficient. So ang beta coefficient, this is a measure of the firm's risk. Firm nga imuhang investan. Okay, how risky that firm is. That is beta coefficient. And the difference between the market return and the risk-free rate. So mo ni ang product of. So i-multiply daw nimo ang beta to the difference between the market return and the risk-free rate. So R sub M represents your market return. So looking at the formula on its entirety, required rate of return is equal to risk-free rate plus beta times market return minus risk-free rate. Ano akong gi-encirculan diri, the difference nila, we call it the market risk premium. Okay? So the difference between the market return and the risk-free rate is our market risk premium. Remember what I mentioned here, 'di ba? Naatay ipuno to compensate for the uncertainty in the market, and we call it the risk premium. So ang atong gipuno mao ni ang difference nilang duha. Mao ni ang sobra. So the market rate of return minus risk-free rate is equal to our risk premium. Risk premium. So sometimes in the problem ang ilang ihatag kani jung duha no na ay market return na asay risk-free rate. However, if what is given is the market risk premium already, kung nanay word nga premium, market risk premium na siya, ayaw na i-deduct o balik ang risk-free rate. Kaya kung ang gihatag risk premium na, that means the risk-free rate has already been deducted. So madouble na imuhang deduction. So timan kung ang ihatag market risk premium, ayaw na siya didaki og risk-free rate. Idiretso na siya og multiply to the beta coefficient. But if what is given is the market return without the premium nga word, so you need to deduct first risk-free rate before you multiply the amount to the beta coefficient. Okay? So I hope na gets to siya. Anyway, later mag-try man ta og solve og problems to make sure nga sakto ang ato ang understanding of this formula. Okay, here. Assuming beta of 1.2. Okay, let's say the firm's beta coefficient is 1.2. A market rate of return. So, timan market rate of return. Wala siya word nga premium.
Document earlier.
Market rate of return of approximately 12% and an expected risk-free rate of 4%. What is the required rate of return? So, remembering our CAPM formula, return is equal to risk-free rate plus beta times market return minus risk-free rate. So, just substitute the factors with the actual numbers given. So here, risk-free rate is 4%. So, mo na siya, 4%. Plus beta. Beta is 1.2 times the difference between the market return here is 12% and the risk-free rate of 4%. So, i-try daw ninyo og solve kung sakto ba makuha ba sad ninyo ang 13.6. So, ang procedure ani is this, di ba? Ang atong rule sa mathematics, kung unsay gi-enclose sa parenthesis, mo na atong unahon og compute. So here, mo na itong unahon. 12% minus 4%. Okay? Then after that, follow MDAS. MDAS. So, multiplication, division, addition, then subtraction. So, unaha ang M, multiplication. So, i-multiply ni mo si 1.2 with the answer here. And then after ana, i-add mo ang 4%. Sakto ra. Okay. So, 13.6%. So, sayon ra no, sayon ra. Now, here we have the security market line. The security market line tells us an investment's risk versus its return. Okay, if you notice, kaning x-axis din this is representative of its risk as measured by its beta coefficient. Then on the y-axis, we have here the expected return. Notice that as we move along the risk, no, magkataas imong risk padung sa right, no? Padung sa right, mao man na ang pa-increase sa risk. So kung magkataas ang risk, you also notice that magkataas pa ang atong return. Thus supports our theory, di ba, na the higher the risk, the higher the return. So mo na siya. If you move towards your right, that means you are increasing risk. That means you need also to increase your expected return. So this is your security market line. Now nganong dili man siya mo touch sa zero. If zero ang risk, if no risk at all, zero, kailangan gihapon ta og risk-free rate. This risk-free rate, dili man gid siya mo zero pod. This is again, risk-free rate is determined by our government securities. Right? So we still have to, we need to have expected return. Otherwise, nganong mag-invest man ta kung wala tay gina-expect na return, no? If you are presented with a zero risk investment, what do you risk? Wala do you risk. Sure jud kayo, certain jud kayo nga makakuha ka ani nga amount. So, mo invest ta ana, nag-expect gyud ta og return. So never gyud na ma-zero ang atong expected return. And it would be absurd for us to enter into an investment without expecting a return. Okay? So if you notice, di gyud siya maabot sa zero dinhi. Ang iyang pinakaubos is the risk-free rate. This is the point where risk is zero, but however, we have a certain expected return depending on our government securities. Okay, so that's our security market line. Now remember, recall your formula for risk-free rate, real risk-free rate. 'Di ba gi-factor in nato dito ang inflation, right? Timan itong real risk-free rate nga formula, itong imagine nun, is equal to 1 plus nominal risk-free rate over 1 plus inflation rate. So appeal di ay mo ni factor in diha ang inflation. Therefore, if there is an inflation in our country, for example, so kani siya ma-change. Either mo move siya upwards or downwards. So there will be a shift in our security market line. So again, SML or security market line is the line that reflects an investment's risk versus its return, or the return on a given investment in relation to its risk. So the measure of risk used for the security market line is beta. If you notice here, risk is measured by its beta coefficient. So again, a shift. So if there is a certain change in the SML, it can occur with changes in the following: the expected real growth in the economy, some capital market conditions, and our expected inflation rate. Now, at this point, let's try to strengthen our understanding on the CAPM formula. So let's try to solve this. The risk-free rate of interest, usahay ang K ba? K is kung ano siya, interest lagi hapon na siya or rate. So ay mo kalibog, pwede siya R, pwede siya K, pwede siya I. Because kani mga variables, they are merely representatives raman. Ni represent og something. So pwede siya maglain-lain og letters. Basta tanawa lang ang iyang description. This is risk-free rate. So KRF iyahang gibutang. K nya sub RF meaning risk-free. So the risk-free rate of interest in this problem is 6%. The overall stock market has an expected return of 12%. Hazlitt Incorporated has a beta of 1.2. So what is the required return of Hazlitt Incorporated stock? So here we are given the risk-free rate And we have the market return of 12%, beta of 1.2. Una siya ang mga given. So, pila man ang atong required return? Na ni answer og C, 12.8. Na-assign ni answer og D. How about the rest? D, di ay, gibawi na ni Lorenzo. How about the others? Okay, daghanag ni answer D. All about the D. Okay, so that's correct. Sakto yung answer. Letter D. So how did we arrive? So katong mga wala nakakuha sa letter D, atong tanawon kung giunsa ni siya pag-compute. Okay? So using the formula for CAPM, required return is equal to risk-free rate plus beta coefficient times market return minus risk-free rate. So, atong i-substitute ang mga actual numbers. Risk-free rate is 6%. So, i-input niyo din na sa inyong calculator 0.06. Then, plus beta here is 1.2. Then, open parenthesis, market return 12% minus risk-free rate of 6%. Then, you will get 13.2%. Very good. Next. About this one. Makani, medium difficulty ni siya. The risk-free rate is 5%. Stock A has a beta of 1.0 and stock B has a beta of 1.4. Stock A has a required return of 11%. What is stock B's required return? Sige daw, B. Try to solve. I'll give you 2 minutes. 2 minutes to answer this. Nakoy timer dali. Okay, so unsaon man ni pag-compute? Someone answered B. Crescentia said B. Laila too, B. Summer said B. 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 How about the others? So yun na pa 40 seconds left. Tunghuat to ng uban. Okay, so I think you got the same answer no? B. Okay, so time's up. Okay, I think everyone got the same answer, B, and B is the correct answer. Okay, so katong mga wala pa nahuman og compute to sige, let's call someone B who said letter B. Yun sa man mo pag-compute sa B. Isabel Lerio. Sige daw, Isabel. May we hear your explanation? No, may tingog si Isabel. How about you, Andrea Carmela? Nganong B man? Andrea? Sige, kay di mo maningog. Okay, so here, stock A's required return was already given, no, at 11%. Okay? But the question is, stock B's required return. So, what is missing here? If you notice, wala tay gihatag nga market return. Okay? So, first is for you to solve market return. Okay? Wait, let me try if I can open a board here para makita ninyo how to solve it. Itong mga wala na solve. Okay. It's really hard if walay kuan ba. Walay blackboard. It's Jamboard. There's this thing called Jamboard sa Google. Okay. Here. Let me share my screen. Naman din siya yung whiteboard din hi. Makita ninyo? Naara?
Yes.
Naara yung whiteboard. Sige.
Yes, miss.
So, required return. Let me try this. Is equal to risk-free plus beta times. Okay, this one. For stock A, so this is return for stock A. Just use this formula, okay? So return for stock A as given, that was 11%. So 0.11 is equal to risk-free rate is 5%, so 0.05 plus beta as given 1.0 times ano siyang RM or market return, wala man siya, so wata ka ba pila na minus risk-free rate of 0.05. Okay, so kung wala mo'y scientific calculator nga makasolve for this one, okay, sa akong calculator, I can just mark this as X, then solve for X. Kung wala mo inanang ang calculator, kana rang basic nga calculator na ninyo, so magmano-mano jud ta. So 0.11 is equal to 0.05 plus. So kani siya inyong i-distribute dito. So that's 1.0 RM minus 1 times this one. So, ano yapon? Then, okay, kani siyang mga figures nga walay variables. Move na to dito. Pick a side. So, it becomes, kani siya mahimong negative. Kani siya mahimong positive. Is equal to 1.0 RM. Then, pila man na siya? 0.11. So, para makuha ninyo ni, i-divide na to. Ito ba? Sakto ba niya akong nabugi? Itsa ha. Sakto ba akong given? Point 11. Ay, sayop. Okay, sakit lang. 1 naman din ini sayop na. Isa ha, raise. And, so ano ni pagbalik? So, this is 0.11 is equal to 1.0 RM. So, 1.0 RM. So, 1 of RM is equal to 0.11. Therefore, market return is 0.11. So, let's remember this. The market return is 0.11. So, for stock B, to compute the required rate of return for stock B, okay. So, stock B's return is equal to risk-free rate 0.05 plus beta of stock B, given beta niya is 1.4 times 0.11 kay mao ni siya ang atuang market return minus the real risk-free rate of 0.05. So, if i-compute na nimo siya, ang answer na to is 13.4%. Okay? Sige. So, let's go back. Na-view ninyo balik ang PowerPoint.
Yes, miss.
Okay.
Yes, miss.
Thank you. Next, here, a stock has an expected return of 12.25%. The beta of the stock is 1.15 and the risk-free rate is 5%. What is the market risk premium? So, the same procedure that we did a while ago. Na-answer diri si Crescencio. E. E ang answer ni Crescencio. About the rest? About the others? Pila man inyong market risk premium? D. Ingon si Pamela D. May mo answer darag A, B, or C? Sabihin yung answer sa uban. D. Daghan kay D na. Okay, remember that market risk premium is the difference between the market rate of return and the real risk-free rate. Okay, Lorenzo also said B. Tristam and Chloe May. So, daghan na mag-D na. D. So, the answer is, yes, correct. That's letter D. So, yes, 6.3%. So, how did we compute that? Let's open our whiteboard. Let's erase everything. Okay, so as given, the return is, gihatag na ni siya, 12.25%. So, this one. Then risk-free rate is 5% plus beta of 1.15. Then we don't know this, minus risk-free rate of 5%. Next will be, so let's copy 2 to 5, 0.05 plus. So distribute this here. So that's 1.15 RM. Then here, this becomes negative. So just multiply 1.15 times 0.05. That is 0.0575. Next is to move all these numbers to the other side of the equation. So this is 2 to 5. Then this becomes negative. This one becomes positive. So, i-compute na to silang tulo. 0.1225 minus 0.05 plus 0.0575. 0.13 is equal to 1.15 RM. So, kanida mo ditong step ko kanina. 1.15 is, so RM is equal to 0.113. Ana. And then what was asked is the market risk premium. And remember that market risk premium is market return minus risk-free rate. So 0.113 minus, ang atong real risk-free rate is kani, 0.05. So mo tong 6.3%. Okay, very good, everyone. Then, let's resume. Next. Given the following information, determine the beta coefficient for stock A that is consistent with the equilibrium. So, this time, what's missing is the beta. No, kani if makita mo ning hat ba? Hat. Hat nga symbol ganis babaw. So, K hat. Ang sabi ng K hat, mauna siya ang required rate of return. So, basta na hat, mauna siya ang required rate of return. So, laman ato ang makompute. Pila man atong beta. coefficient. Anyone? For my answer? B. B said Chloe. Lorenzo as well. Also Fabi's answer. How about the others? Ilaman inyong answer. B said Tristam. B. Okay, correct. So I think everyone got the correct answer naman. Mao lang mo mukuan diri no. Mo chika diri sa atong chat box. I believe that everyone got the correct answer. So the correct answer is letter B, 1.26. So just follow ang ato ang procedure ganina, same lang gyud as long as you know the complete formula for our CAPM. So just substitute these numbers dito sa ato ang mga factors sa ato ang formula. Then you will be able to get the answer na 1.26. Okay? Then lastly, this one. Assume that the risk-free rate is 5% and the market risk premium is 7%. If a stock has a required rate of return of 13.75%, what is its beta? So compute for the beta for this stock. Kane said A. Lorenzo as well. Then kang Carl Franzine, still A. Tristam also said A. Okay. So I think at this point, sayo na lang para ninyo, no? Kay parehas naman siya tag-answer. Wala na may nasayop. So, ang tricky lang ani nga part kay knowing, kani kuan man siya, kanang murag mo siya na hint because naman siya ay options, naman siya ay kuan diri choices. Pero kung wala ni siya, uban nga masayop because sa gihatag nga market risk premium nga 7%, uban nga i-deduct pa nila ang risk-free rate nga 5%, and that would be wrong. Okay? So take note nga if makakita mo og risk premium, that means that percentage has already been net of the risk-free rate. So, after na ni siya gideductan sa risk-free rate. So, do not deduct the risk-free rate again. Okay, because remember, market risk premium is market return minus risk-free rate. Okay, so your answers are correct. So, the beta for this stock is 1.25. Very good. Okay, so at this point, we will open a new topic. Okay, this time we will be talking about investment analysis and portfolio management. Okay, wait, let me share my screen once again. Hmm. Okay, here. So, moving on, we have investment analysis and portfolio management. This is the asset allocation decision. So what do we mean by asset allocation? So asset allocation. So i-allocate na tong assets. This is the process of deciding how to distribute an investor's wealth among different countries and asset classes for investment purposes. So kaning asset allocation, mura siya og problema sa mga dato. Ladaghanan akong kwarta, oy, asa man ni nako ibutang akong kwarta, asa pa man ni nako i-invest. Okay, so that's what we call asset allocation. This is the process of you deciding when you have lots of excess cash to invest, you are to decide how should I distribute this money. Pila man ani sa ako ang 100 million nga sobra, nagproblema na ka unsaon na nimo. So ang 100 million ganahan ko nga tunga-tungaon ni siya into 100 investments. Unya, mag-decide pug kapila man ang akong i-invest ani nga stock. So for example, 1 million out of my 100 million. And then unsa pa man asa pa man din ako invest. So that's what we call asset allocation. So we distribute it among different countries to also take advantage of foreign exchange um, rates. If maayo kag forex trading, kabalo ka mo predict sa movement sa exchange rates, then sayon ra kayong kwarta para nimo. And also, you will have to consider which asset classes nimo ibutang ang muhang kwarta. So unsa man ning asset classes or asset class? Asset class refers to the group of securities that have similar characteristics, attributes, and risk or return relationships. So, grupo ni siya sa mga assets. Ang usual na to nga asset classes are like your bonds and your stocks. So, all bonds are grouped into one class. When we say bonds, manggod, liabilities man na siya sa issuing company. So para masabtan na to ang difference ha sa bonds and stocks at this point, ato nang i-explain. Sige, unsa may difference sa bonds di ay ug sa stocks? Ug asa man ana nila ang mas nindot jud? Kung risk averse ka or risk taker, mo matter na siya. Okay? Just erase this first. Okay. Bonds versus stocks. I'm sure you've heard these terms a lot of times na, no? In relation to investing. So, basically, as to nature, bonds kay liability na siya. Ang stocks, equity. Okay, sabto na to. This is you. You. Ikaw si investor. Right? Daghan kag kwarta. Now, if you buy bonds, you have to look for a corporation that issues bonds. Pwede corporation, private corporation, pwede sa government. So, nata diri corp, nasa tayo government. Take note that not all corporations have the authority to issue bonds. Here in the Philippines, before a corporation can issue bonds, kailangan sila mo apply ana sa Securities and Exchange Commission. So, si corp, mamaligya na siya og bonds. More siya mamaligya. Mo sell or mo issue og bonds. Now, why do corporations issue bonds? Because, i-apply nila dito sa SEC, they would say nga, we need cash. Kuwang mi og cash, so mag-issue mig bonds. So, bonds are actually liabilities. Mura siya og mangutang siya nimo. Ikaw, daghan kag kwarta. Kani, kuwang man siya kwarta. Mo issue siya bonds. So, ikaw, muhatag siya nimo bonds. Nana ni diri document no, we call it bond certificate. Cert. Let's say this is for 1M. So, si Corp, mo issue ni mo og bond cert. Ikaw, investor ka, kay imong kwarta. Okay. How can we change color? Okay. You will then give this corporation the 1 million. So nasa plus 1 million, ikaw na kay minus 1 million because you gave your money to this corporation. You are the investor. Now, what is your relationship here? It's like debtor-creditor. Na ay debtor, na asay creditor. Na ay nakautang, na ay giutangan. So, kinsa may nakautang din si corporation. So, there is a bond certificate. It will actually tell you the terms. Na dinhay, pila man ka percentage ug how often siya mo bayad sa interest. This is interest. Kaya nakautang man siya nimo. So, your income as an investor will be in the form of interest. Okay? Kaning interest manggod, since naan siya sa bond certificate, this is guaranteed. So, for example, if mingon siya monthly interest, kada month yun, si corporation mo hatag nimong interest. Unya, after sa maturity date, kailangan ibalik niya nimo ang imong 1 million. So, you, as an investor, nabalik imong 1 million and at the same time, you were able to earn the monthly interest, right? So, pwede po siya government bonds. So, si government, mo issue po na siya og bonds. The government bonds issued here are, di ba, risk-free. Anong risk-free man? Because si government always mo bayad siyang utang. Di na mo dagan si government. Kani si corporation, although naa diri di ba sa sabot ninyo sa bond certificate na mo bayad siya monthly. But is there a possibility nga mo default si corporation? Di siya kabayad sa iyang monthly interest nimo. Answer is yes. So there is this corresponding default risk. But this default risk, non-existent sa government bonds. Kay risk-free man sila, di man sila modagan. Di man sila pwede kaingon nga, wa mi kwarta ikabayad because the government is always presumed to be always having the enough money to buy to pay off their liabilities. So here, si corporation, say balik sa to ang original example, si corporation will be treated as the issuing corporation, then you will be treated as the bondholder. Okay, so kung mutuman lang jud si corporation sa sabot, every month makadawat gyud ka, right? Kadawat gyud ka og interest. So na kay income per month. So say for example, if the interest will be 10% per month, so 10% of the 1 million na kay income ana every month. Pero kung stocks siya, okay, so this time let's talk about stocks. Okay. Ang kaning stocks nga transaction, this is considered as an equity transaction. Equity siya. So, ikaw ni, this is you are the prospective investor. Then you have excess cash. Here is corp, let's say A corp. Now take note, not all corporations can issue stocks. Usahay tawgon siya og shares. Pwede sad komplituhon shares of stock. Grabe. So pwede siya stock, pwede siya shares, pwede sad shares of stock. So not all corporations can issue stocks or shares. Only share corps can issue stocks. Kung non-stock siya, non-stock, non-profit. Kung non-stock, non-profit. Pangan pa lang daan, non-stock. Wa sila stocks, non-profit. Like for example, San Carlos. San Carlos is a non-stock, non-profit educational institution. So, San Carlos cannot issue stocks. Ito rang mga stock corporations or share corporations. So, for example here, si A Corp, napa siya available nga 500,000 shares unissued. O pa nabaligya. So ikaw, let's say these 500,000 shares are being sold at 10 pesos per share. Ikaw, ganahan ka nga palito ni tibuok 500,000 shares. So what you will do is, you will simply pay. Kaya mo man palito ni. Pila man imong bero nun. You will have to pay 5 million, right? Sakto ba ko math? So 5 million. Bayad kag 5 million. So in exchange, a corporation will give you these 500,000 shares. You will become an owner of this share. So since you bought some, shares are equity man, right? So you are partly an owner of a corporation. Here for bonds, you only assume the personality of a creditor. Giutangan ra ka sa corporation, but you are not one of the owners of the corporation. But for stocks, you become an owner of a corporation. Pero dili ra ikaw, together with the other persons who also bought shares from a corporation. So you own the 500,000 shares. You become a shareholder or a stockholder. Now, how do you earn income man? Through buying stocks or shares. Take note, this one, under our corporation law, no, there is sa Philippines, under the Corporation Code of the Philippines, stock corporations are not obliged to give dividends every year. Okay, so as a shareholder or a stockholder, you earn by receiving dividends. Here, as a bondholder, you earn by receiving interest. Right? Ang interest na nadira based sa bond certificate kung how often og pila pod ang imuhang dawaton nga interest. Here, as a stockholder, stocks man ta, you earn by receiving dividends. Unlike interest, which is guaranteed yun nga, naagid obligation ba sa corporation to pay you the interest every month. Here, the corporation is not obliged to declare dividends every year. So it's really up to the board of directors. Kung ang board of directors ni A corporation, kung ang BOD niya, wala nag-declare og dividends this year, you also will not earn dividends. Let's say may sige, what lang ko next year. Inig next year, wa gihapon sila nag-declare dividends, wa kay income, right? Inig next year, wa sila nag-declare dividends, wa sa kay income. So, kung mapulan ka na, sige, huwat sa imong dividends, mata na ka, unsaon man ako pag-earn. Asa naman to ang fruit sa akong 5 million? If a corporation has been doing well for the last, let's say for the last 3 years, ang kaning 10 pesos per share, pwede na siya ma-change, no? Let's say after 3 years, so plus 3 years na ang nilabay, wag yun ka nakadawat og dividends. But the price per share, ni-increase siya to 50 per share. So, although wa ka nakadawat og dividends, kaya wa man sila nag-declare og dividends, you can actually earn from this investment through selling your shares. Hindi mo na siyang ihatag to someone else. Let's say, naadinhi si, okay, naadinhi another investor, si Mr. X. Pwede nini mo siya ibaligya ni Mr. X. At this time, 50 per share. So, nakaginansya ka. Because when you bought these shares, you bought these at 10. But when you sold it at 50. Ginansya ka, right? So, the main difference between bonds and stocks is first, bonds is a liability on the perspective of the issuing corporation. Then stocks, kay equity siya. Then, if you are an investor in bonds, medyo asterisk, bonds are less risky. Kaya nga naman, ni-undertake man si issuing corporation nga mohatag nimong interest kada period. Could be monthly or or quarterly, semi-annually, or annually. Basta kay naa jud siya gi-promise nimo. Diri kay riskier siya. Kay wa man kay sure when ka makadawat og dividends. Okay, so mo na siya ang basic nga distinction between these two types of investments. So, asset class, all bonds are treated as one class. Then, a class could be further divided into subclasses. So, for example, a bond is an asset class. If you are to subdivide it, pwede siya nimo i-subcategorize into government bonds or coupon bonds. Daghan na siya klase-klase nga mga bonds. Okay? So, I hope you get the point. Then, for financial plan preliminaries. So if you want to plan out your financial investments and financial goals, you have to go through these preliminaries first. So before ka mo take sa imong huge leap into investing, you need to consider these things first. Okay. So, ano daw, according to our finance experts, these three preliminaries are essential to a newbie investor. Okay, wait lang, wait. Okay, so you need to have first life insurance. Before daw kuno ka maghunahuna asa kanina ko i-invest no sa nga mga bonds and stocks. You need to have first life insurance. Life insurance, kasabot naman siguro mag life insurance. The proceeds of the life insurance is payable to your heirs or beneficiaries in case of your death. So you need to secure your life because reality check lang, dili raman ikaw ang imuhang buhion, no? Namon pud kay mga dependents. Okay, so especially if you get married someday and have kids. So, hunahuna pud ka. Kasi mahitabo if mamatay kag kalit. So at least you have life insurance. So this should be one of your preliminaries. Also, non-life insurance. For example, accident and health insurance nga dili involving death. Okay, so for example, if masakit ka, hospital ka, mahal kaayo ang hospital bills. If wala kay health insurance, ako jud kag mabayaran. But if you do have health insurance is covered under this one, non-life insurance. Then cash reserves. This is your emergency fund. What if makalit lang ka og ka-terminate sa imong trabaho? Makalit lang. Can you sustain needs and your families? So kung dili, ayo sa sige invest o patakag invest imong kwarta. I-build up sa imong cash reserve or your emergency fund. Now typically, ang ideal cash reserve is 6 months worth of your monthly expenses. So dapat na kay reserve nga worth 6 months. So if sa imuhang estimate makagasto kag 15,000 every month para sa imuhang sustenance o sa imong family's sustenance, dapat na kay 15,000 times 6 nga imuhang cash reserve. Kanang cash reserve nimo or emergency fund, this should not be touched. Dili nimo pwede gamiton for investing. Okay? So ang rule man gud ani, invest the money you are willing to lose. So kung nakapakay kwarta nga, okay ra nimo mawa na nimo nga kwarta if mapalpak imong investment, then diha pa ka dapat mo invest sa imong kwarta into some investments. So these are your preliminaries. So in order for us to understand this better, I will be or I already contacted her. I contacted a friend that would explain to you the specifics on these life insurance and non-life insurance para at least you will have a good grasp of unsa jud ni siya, how it can benefit you. So next meeting, next Friday, na ako diri ipa-join sa atong meeting nga close friend nako. She is, yeah, she's one of my closest friends in college. She was also one of our summa cum laude in BS accountancy sa among batch. Summa cum laude siya. And then with regard to investments, siya one of my advisors, quote unquote advisors, friendly advisors. Okay. And then sa kaning cash reserve, I also have my best friend nga sige remind nako pud ani mag-remind mi sa each other to really build up our cash reserve. Now, ara lang sa tataman. Okay, so next meeting, first na tong agenda is atong paminawon ang discussion ni Miss Revilla regarding these investments, personal investments. And then, if wala pa mo naka-view sa akong gihatag na link sa YouTube, please also view katong mga top 10 investment scams in the Philippines because after Miss Revilla's discussion next Friday, we will also have to look at um, the guidelines on how can we assess whether this investment is legit or not because diba of course we don't want to lose our money sa kaning mga false or fake investments, right? So mo na siya ang ato ang goal for next meeting. And since it's already past 8 naman, so let's stop here. I hope everyone had learned something new tonight. Now, before we go, let me let me check your attendance. Please turn on your cameras so I could take a screenshot. Padungog mo, naamang goy nagklase diri. Loba. Oh, wow. Nice background ha, kagang. Okay. So I'll be taking three screenshots ha. Wait lang. Okay, first screenshot. 3, 2, oo, sige, okay ra, Lord Christian. Sige, 3, 2, 1. Smile. Second screenshot. Daghan mo mo. Sige. 3, 2, 1. Smile. Uy, magwapa, uy. Then, last screenshot. Sige, okay ra. No worries. Basta kay naa ka sa ako ang screenshot. Okay, last screenshot. 3, 2, 1. Smile. Okay. So thank you everyone for participating. I really enjoyed our class tonight. Talk to you again on Friday. Bye.
Miss. Bye, Miss. Thank
Bye,
you,
Miss.
Miss.
Thank you, Miss.
Thank you, miss.
Thank you, Miss.